Welcome to The Explainer. So glad you're here. Today, we're cracking open a really fascinating case study. We are going to completely dissect the financial performance and the underlying structure of a heavy hitter in the Islamic financial sector, Syarikat Takaful Malaysia Keluarga Berhad. If you've ever found yourself wondering how to actually evaluate a financial asset, from both a fundamental and a technical perspective, well, you're in exactly the right place. We're going to break down the numbers, read the charts, and figure out exactly what makes this asset tick.
Okay, let's dive into this. Here's the roadmap for our analytical journey today. 1. Exploring Sharia-compliant investing. 2. The Takaful business model. 3. Tracking recent price action. 4. Key financial health ratios. 5. Macroeconomic market influences. And finally, number 6, the final investment verdict.
Section 1. Exploring Sharia-compliant investing. Ethical wealth generation.
Before we actually look at the company itself, we've got to understand the ecosystem it operates in, right? There is a massive, and I mean rapidly growing, global interest in ethical, faith-based wealth generation. At its core, Sharia-compliant investing is all about ensuring your wealth grows without compromising religious or ethical principles. To do that, it strictly excludes prohibited elements, things like riba, which is conventional interest, gharar, meaning excessive uncertainty or deception, and maysir, which translates to gambling or pure speculation. This framework acts as a fantastic solution for responsible investors who are hunting for highly transparent and ethical business activities.
Section 2. The Takaful business model. Mutual cooperation.
So our subject today is Takaful Malaysia, trading under the stock code 6139. Now, unlike your standard conventional insurance setup, which usually involves risk transfer and a lot of uncertainty, Takaful is an Islamic alternative, deeply rooted in mutual cooperation and risk sharing. It's pretty cool, actually. Participants pull their money together to guarantee each other against loss or damage. To understand where Takaful Malaysia is today, we have to quickly look at its pedigree. They incorporated way back in November of 1984, started operations the very next year, and hit the main board in 1996, which really opened the doors to public ownership. But the key date I want you to zero in on here is 2018. That's when their composite license was demerged. This was a super strategic move that separated the family Takaful business from the general Takaful business. Doing that gave them the flexibility and honestly the laser focus needed to really leverage their specific strengths in the market.
And wow, that focus strategy has paid off immensely. Just look at this figure, 3.78 billion ringgit. That is their total Takaful revenue reported for the 2025 financial year. That's a huge number. It's absolutely crucial because it establishes the sheer scale of the company. It proves they have a serious, enduring competitive stance in the market, completely driven by sustained demand for Sharia-compliant products and people just waking up to the need for financial protection. Now, massive revenue is great, sure, but we also need to see actual profitability, right? For that same period, they reported a profit before zakat and tax of 616 million ringgit. That shows an incredibly strong business performance. They aren't just hauling in funds, they're managing them efficiently and profitably. So keep that underlying financial strength in the back of your mind as we pivot to see how the market is actually pricing these shares right now.
Section 3. Tracking recent price action. Technical analysis.
Now, what's really interesting about this slide is the distinct pattern of movement we see starting from early March 2026. At first, prices are just kind of hovering around the 320 to 325 range. But then, look at that steady, optimistic climb all through April. It pushes all the way up to a peak of about 350 to 355 by early May. That right there reflects strong investor belief. But, as we see all the time in the markets, a totally natural profit-taking correction followed. By mid-May, the price began to dip, eventually settling back down around 325 by the end of June.
When we take that chart and break it down into actionable technical levels, here's what we're looking at. A resistance level, the ceiling where selling pressure historically overcomes buying pressure, that's firmly in that 350 to 355 range. Meanwhile, the support level, the floor where buyers tend to jump back in, is rock solid at 320 to 325. So what does this tell us? It tells us the stock is relatively stable. It largely lacks that wild, extreme volatility you might see in tech or highly speculative assets, which, honestly, is a key trade if you're looking for a low-risk, income-driven investment.
Section 4. Key financial health ratios. Fundamental numbers.
All right, this is the absolute climax of our analysis. We've seen the chart, but now we've got to look under the hood. Let's dive into the fundamental numbers that are actually driving this stock's intrinsic value, starting with this incredibly powerful metric, 18.4%. This is the company's return on equity, or ROE. ROE essentially tells us what the company has earned for their shareholders on the money invested. At 18.4%,
That demonstrates highly efficient use of shareholder capital. It tells us the management team is crushing it, taking the funds they have and generating substantial, reliable profits from their Takaful business and investments.
Next up, we look at valuation using the price-to-earnings, or PE ratio, which is currently sitting at 7.36 times. Let's translate what this actually means for you out there as an investor. At a PE of 7.36, you're basically only paying 7 ringgit and 36 cent for every single ringgit of earnings the company produces. When you realize that the industry average for most financial companies usually ranges between 10 to 15 times, this 7.36 multiple suggests a very affordable, reasonably priced valuation. It's a bargain, relatively speaking.
And then, of course, there's the income component. Takaful Malaysia boasts a dividend yield of 5.69%. Remember, at a current market price of around 325, you are getting an almost 6% return just for holding the stock. For investors who prioritize building a reliable, passive income stream, this is a highly attractive figure. It allows you to collect a nice fair dividend while still keeping your exposure to a fundamentally strong Sharia-compliant stock for the long haul.
Now, let's clarify a really crucial nuance here, because this often trips up novice investors when they look at financial institutions. If you look at the raw debt-to-equity ratio, it looks terrifyingly high at 6.99 times. But wait, you cannot read this like a traditional manufacturing firm. That high total liability figure, it's completely normal because it includes the massive participant funds and Takaful contract liabilities they literally just hold in trust. When you strip all that away and look purely at their actual financial borrowing risk exposure, it is incredibly low, just 0.21 times. So rest assured, this company is absolutely not overburdened by debt.
And this brilliantly illustrates how proactively the company manages its capital structure. As noted in their integrated report, back in September 2025, they issued a 500 million ringgit Tier 2 subordinated sukuk. Basically, this Sharia-compliant bond was issued at a super competitive profit rate of 3.83% per annum to be utilized for working capital and corporate purposes. It really shows we're dealing with a sophisticated management team that knows exactly how to leverage the capital markets efficiently to fuel their operations.
Section 5. Macroeconomic Market Influences. External market forces.
Obviously, no company exists in a vacuum, right? So we have to consider how external forces, stuff totally outside the company's control, might impact this asset moving forward. There are 3 major macro forces we need to track here. First up, interest rates. A stable interest rate environment positively benefits the company's own investment returns, which boosts their overall profitability. Second, inflation. If inflation spikes, it puts pressure on household disposable income, which could slightly reduce consumer capability to purchase family Takaful products. And third, overall GDP growth. A rising, healthy economy naturally boosts overall economic activity, which leads directly to higher demand for life, general, and marine Takaful services.
Section 6. The final investment verdict. Final conclusion. All right, we've covered the business model, the technical charts, the fundamental ratios, and the macro environment. So, the crucial point is this clear distinction of who this asset actually fits best. Based on its tendency for sideways trading patterns and those temporary correction phases we saw, this is absolutely not for short-term day traders looking to capture massive, rapid capital gains. However, if you're a moderate risk investor who values a stable, affordable valuation paired with a highly reliable dividend yield all wrapped up in a strictly Sharia-compliant framework, well, this asset makes an incredibly compelling case for your portfolio.
Which leads us with this final question for you to consider today. Do these stable fundamentals, consistent dividend yields, and a Sharia-compliant ethical framework align with the specific goals of your own personal investment portfolio? Because at the end of the day, it all comes down to knowing exactly what you want as an investor and finding the assets that clearly fit that profile. Thank you so much for joining me on this explainer today. Keep learning, stay focused on your goals, and I'll see you next time.